Good afternoon. This is Patrick, and you're trading with Prime. What an amazing day. What an amazing week. We've had 1, 2, 3, 4, 5 days of straight buying. I don't know if there's an end in sight. We will see what tomorrow brings. We have, I believe, Powell speaking in the morning. We also have GDP numbers coming out. It could get interesting. It's either, maybe the market won't care. Maybe it'll just continue on higher. We shall see. At this point in time, I would not be trying to sell this market. If you're holding long positions, there's no reason to sell. We are going to get into these things today. All right, first thing I want to look at. This is called the Cboe put to call ratio, and I will put a link to this in the description. So what we have here is 0.42 puts for every 100 calls are August 25th, 2020. So just something to really consider here. We are trading at 0.42, and this is a 5-year chart. So as you can see, we're getting down here, and I want to say it's down sloping at this point. This is getting down here. We're entering that zone, if you will, where the market might run out of buyers. I know it's almost hard to think about right now. It's hard to imagine and hard to believe. But usually when we get this low, we do see a little bit of a correction. And I don't mean a huge correction. It could be a tiny little pop. And what I'm going to do is I'm going to zoom in on, just so you can see this. Here's the 1-year chart. And as you can see, we are getting down here again. I'm going to go to a 6-month chart. I'm going to go to another low point. Let's pick one of these low points over here. Here is June 8th. Follow my cursor if you will. This is June 8th. This year, we saw a put to call ratio of around 0.37. That is extremely low. So we were getting down there. And I want to say anything really below what used to be normal is around 0.7, 0.75. It seems like the new normal is around 0.5. But we were getting down there, getting trapped down there. And like I said before, that usually is a sign, a contrarian way of looking at maybe there is going to be a little bit of profit taking and not necessarily looking for a crash. But we're going to go to the chart and look at this June 8th date just so you can see what happened on June 8th. I'm going to find it on my chart here. So 6-8. That's this candle right here if you followed my cursor. And so what I'm going to do is just kind of highlight this and show you what happened back there. And of course, we did have a little bit of resistance coming over here. I know it's above our resistant level, but it's more conceptual. There was resistance zone back here, around March 2nd. And so what we kind of saw is June 8th came, and then we traded sideways a little bit, traded sideways to down a little bit. Technically, this was a reversal candle just for the fact that it closed below the previous 2 days. But it wasn't that big of a deal. It wasn't until we opened up the following day that the selling really started to accelerate. And as you can tell by the volume coming in here on the next 2 days, in fact, the next 3 days, you could tell that maybe institutions were purchasing this. We saw it trade away, and then it pulled back again for a little bit of a corrective move. So I'm not saying it'll look just like that. To be honest, we could just trade sideways from here. It's too hard to tell. It's too hard to tell at this point, but we are above these two trend lines. And so what I'm after as far as swing trading is I want price to either come to my trend line to the side or will correct in price. Either option works for me. We will see. Next thing I want to look at is, well, as far as price levels go themselves, I don't know if we could actually look. Let's go down to a smaller time frame here. And hopefully we can give you guys a little bit of analysis on the smaller time frames. Let me zoom in here a little bit better so you can kind of really see the chart here. So we do have a little bit of support around 341, 341.50, somewhere in that zone. We also have support, immediate support just below us, and I'm going to give you an actual price on that support level, which is 345.37. So just call it $345.40. You could see price, one of these scenarios where price comes down to this, it'll find support. Maybe it pulls back. If it does break below this one, it will go down to this next level around 341. In fact, there could be still a little bit of support in this area as well. And so those would be the first 3 that you have to kind of keep an eye on. If all 3 of these fail, price will probably come back to 339.50. And if that doesn't hold, down here at 335.50. So those are all support levels to kind of keep an eye on. As far as the upside, there is no resistance. And what happens is when you're trading at all-time highs, their only resistance that is available to us, and I don't want to say the RSI because, you know, something can stay at an RSI of 80 for 2 or 3 weeks. So you can't really trade off of the RSI in this case. But something to also look at is possibly psychological resistance. So like I was saying in the beginning of the video, 347.86. So maybe we'll see resistance around 350. Maybe price wants to get pulled up to that psychological round number of 350. That is possible. Let's go to the Nasdaq. For the Nasdaq, I use the triple Qs is the ticker symbol QQQ. Same thing with the Nasdaq. In fact, this is probably what was pulling the market up, and we'll look at a couple of the stocks in the Nasdaq. You know, but just looking at this, the FANG stocks have a I believe a 25% weighted in the S&P 500, and that's why they pull the S&P 500. Just those few stocks pull the entire index up. Same thing, close at all-time highs pretty much. There's no, again, we might as well go to 300. I'm just going to draw it on the screen here. It's almost unbelievable to think about. The other alternative here is we could always stay in this range and kind of trade sideways. That's an option. And then the last thing that could happen is, you know, if we did get a reversal candle, maybe we will have a little bit of a correction, but more in price than in time. Let me clear the screen. I'll zoom in a little bit on the Qs as well, just for the people that trade the QQQ. You know, or if you're trading the FANG stocks themselves or any stocks in the Nasdaq, maybe this would be good to kind of keep an eye on. Let's zoom down here a little bit more. So we will have support down here around 287. Let me give you an actual price. We'll have support at 286.96. So yeah, call it 287. You also have support down here at 282.05. And again, you'll have support down here between 247 and between 274 and 273.50 before you start to see more lower prices. But you'll have to get below these 3 price level supports before anything else happens. And that would take, at this point, really bad news. At this point, based on the way the Qs closed today, I would say higher prices are more likely than lower prices. Probably see another day of melting up unless some bad news comes out, or if the Fed says something that the market doesn't like tomorrow. Again, no reason to sell your long positions. There isn't a reversal in the Qs or at all-time highs. I wouldn't be selling your long positions, in my opinion. Let's go to the IWM. We saw a little bit of weakness, relative weakness in the IWM. And this is something to kind of consider here. Usually you want to see if the S&P 500 is going to go higher, the Qs are going to go to 300. It is most probable that the IWM will also rally up, and you saw an up move, and so far we've been kind of consolidating here. We do have this rising wedge, but I wouldn't pay too much attention to that just yet. It can be used as a little bit of support, and so far it did act as support a couple days ago. I believe on Friday coming into Monday, it did act as support. So we'll see what happens. To me, same thing. Even though we had a bad day today and a little bit of a bad day yesterday, I believe that higher prices would be more likely just looking at the chart. But keeping in mind, we are getting pretty high up on the chart as far as, you know, maybe this market needs a little bit of time to take a breather. Let's go to the XLF. XLF, same kind of scenario as the IWM. We saw a little bit of weakness in the XLF. And if, I don't know if you guys are, you know, if you trade the banking stocks very much, but this would be a good thing to look at if you are trading the banking stocks. We saw a rising wedge pattern coming off of the March lows. And I don't know, maybe I have my trend line drawn in the wrong place. Maybe it goes here. But something I thought about was this. Is it possible that we had a move up? The same thing with the IWM. It looks like we're consolidating for another move higher, but we kind of stalled out right here. And so then I was thinking about this. I was thinking maybe this rising wedge pattern, maybe it flushed through it already. And so far what we see is a back test before it rolls over. And I'm not saying it will roll over, but what I am saying is if price gets below this level around $24, call it $24.20, $24.25, somewhere in that area. If price can start getting below that, that would be a good place to start entering short positions, in my opinion, of course. And let's go to the Bank of America in the financial sector. So you saw this rising trend line coming off the March lows, and then you saw the same kind of a pattern. See how this is pretty similar to the XLF. if you wanted to trade the XLF, you could trade it by itself. Another idea is to actually look at stocks that are in the XLF as far as any type of banking or financial stocks. They all kind of trade together. Let's look at silver and then gold, and then we're going to wrap it up. Silver, we had a nice move today. This chart was posted. It was posted in our Discord, which brings me to the I'll put Discord, a link of it in the description of the video. If you guys are getting value out of these videos, be sure and hit the like button. It helps the channel out. Hit the subscribe button, bell notifications. We do go live every Sunday, 5 p.m. Pacific Standard Time, to help out new traders who want to be involved in learning technical analysis. Let's see here. So SLV was posted. The chart was posted, and what I was looking at is we do have like a rising pattern here, but we did make this move up, and we've so far just been trading sideways. So what I was looking at specifically for this one was we had a downsloping trend here, plus we had higher lows coming off the bottom. To me, it looked more like a flag pattern. It did break out today. So again, I would want to say higher prices likely. However, we do have, don't forget Jerome Powell again tomorrow morning. We are coming into some minor resistance right here, but it is possible that we take out that resistance and head higher. Another one I want to look at, and then we'll wrap this up, is GLD. GLD, the same thing, the same kind of rising pattern we saw here, is trend line support. In fact, I want to zoom down to a smaller time frame for you guys, just so you can kind of see what we were looking at. Let's go to a 182 hour. So ticker symbol GLD. And I'll put this trend line back in here. And the trend line doesn't have to be perfect. It's more about conceptual. So however you want to draw it on here, it's more about what price, if it closed below a certain price, where where would you stop out? What I was seeing with GLD, the reason why it was a good trade is that we saw this rising trend here, and then we also saw this support level here. Now, it didn't feel like it at the time, and in fact, I wasn't wanting to take this trade. It was another member of the group who decided that he wanted to go ahead and take the trade. He informed me of it, and I looked at it, and I was actually second guessing this just based on the candles yesterday and how low they were. But overall, looking at it again, we noticed that it was following both of these scenarios where you had not only horizontal support, but you also had trend line support coming in here. And so we did see continuation. We saw higher prices. What I would be looking for right now is possibly a higher low as opposed to the slowdown here. We want to see a higher low, maybe hitting this trend line again. And then once it resumes off of there, that would be a really good place to start your long positions. Just keep in mind there is resistance here at 187.69, and then there's going to be resistance up here at 191.10, and then of course 194.50. Keep all three of those on there. So again, guys, we're available every Sunday, 5 p.m. Pacific Standard Time, and that's it for this video. Have a good rest of the week.